Good morning, traders. Saturday morning, uh, doing a little bit of chart homework. The first thing I want to start with is 4 hour candles, and are some more significant than others? And this isn't my information, it's just what I have learned by watching several hundred ICT videos. But he says that the regular trading hour levels are the most important. The others are not completely insignificant, but you may just think of it like if I'm trading the Asia session, the highs and lows on every candle are more important. But if you're trading the New York session, you want to use the highs and lows of the New York session candles. And so right now you have every candle that's formed, this 4 hour extended. So, there's a lot of noise. And there's a lot of these that occurred when volume was very low, like in Asia session or even London session. There's more volume that goes through the market during the first 30 minutes of the New York session than all the others combined. So those levels is what the algorithm is going to be referring to. Now, see, I marked all these out with a regular trading hour deal. So if we go back in time, this was a regular trading hour low. It gets taken out, and then we move higher and we take out a regular trading hour high. So you could actually clone this bad boy. I don't want to get too many on here. See, that's a regular trading hour high that got taken out, and then it came back down. So what I've been having trouble with is I'll have a level marked out, like maybe it's a little higher than this, and I'll be expecting it to take that level, and it doesn't. It leaves it and it falls out of bed. Case in point would be this little situation right here. This is when the news came out that the Fed chair might get fired, and we dropped 200 points. There were daily lows down here. The daily candles are going to show you extended hours as well. Where they're important is where they match up with the regular trading hour lows. So here I'm expecting it to drop just a little bit further and get to the daily low, and it doesn't. It stops on a dime there and gives you no opportunity to enter, just starts racing back up all 200 points. So let's look at that in extended just for a moment, and we'll focus on that area. So here's our regular trading hour low. We have these relative equal lows on the daily. Why didn't we take them? Or on the extended hour? Why did we not take those? If you go all the way back in time to here, this is a regular trading hour low right here. It got taken out here, revisited, rejected. Now these guys took out that, but I think this is the only regular trading hour right there. Let's just look again and see. Yeah. So this is the only regular trading hour candle that took out that low. So we didn't need to revisit that area during regular trading hours. So when we came down, all we needed to do was take out this one. You could even say these are almost like a relative equal low situation, but I think this one got taken out by that guy. So then we revisit it, and we just raced right back up. If you were trading that day, you know exactly what I'm talking about. So then up here also we have this all-time high. If you're looking on this 4 hour chart, this one occurred afterwards. You might have that one marked as your high, and we may only stop there and then pull back. We already took that. So whenever you add in the extended hours, there's just a whole lot more noise. Like right here, we have relative equal lows. I think this area is going to have to be revisited because it's both a regular trading hour and an extended trading hour, almost like a triple bottom there. So this is a regular trading hour. I would say that one is going to be revisited. This one, I'm not sure if that's regular trading hour. I think it is a regular trading hour low as well. But so whenever you're marking your levels, I just think it's really important that we use only regular trading hours if you're trading New York session as your levels where price might trade to. As you can obviously see during regular trading hours, those are the levels we're reaching for. Okay. Let me get rid of that. I'm going to zoom in right here, do a little bit of weekly recap as well while we're here. Yesterday, the week wasn't great for me, but I did, I'm still learning here and there. I've been having a lot of success, having profit every day and losing that profit. They call that being a give back trader. So you make money in the morning and then you give it back in the afternoon. And I've been doing that a lot. And also, another thing I've been doing is say I get in on a trade and I'm doing really well. Maybe I'm up $200, $300, $400, and then I have one of these candles come and stop me out at break even, and maybe I make $20 on it, and that is very, very frustrating. So I'm going to start with a new game plan. If you see an obvious level where price may be reaching, and it's obvious it's going there, then maybe you get a little bit more money, but just my current game plan is when I see a reversal pattern happen, I've been saying 10 points, but I think I'm just going to try to grab like 15 points. Okay. So this would be an example right here. We came down, I think these are equals 198.50, 186.75. Yeah. Am I right on that? And 198.50, 186.75. So this one is our lowest low. So here would be our breaker on that one. And I did take this trade. This was on Friday, and the action was not good after we got to a certain point. We just ranged. But even within the range, there was some opportunities if you're doing it the way I'm showing you. Okay, so we validate this breaker. We kind of just hang out for a long time. At this point, I think we had a little fair value gap right there, and I entered there, but then I got stopped out. And then once we started to validate again, which I waited till it got above that range, and I entered here. And instead of expecting it to go all the way back up to the highs like I normally would, I'm just going to grab the lowest hanging fruit. So if we get in here, 15 points would be around the 40 range, and it would be close to that high. So I would just go for that for 15 points. And in this case, I actually thought, well, you know what? I'll try for round number, but once I get up $200, I'm going to put my stop at $200. And so that's what I did. And I ended up getting it all the way to, not round number, but 50. 50 is a level that typically it gets revisited. Now, let's say you were thinking, oh, well, we took this level. Now we're going to go take the liquidity up here because those are equal right there. Let's say you were going to try to get that and call that buy side liquidity. Would you have gotten filled? No, you wouldn't. And you'd be waiting through all of this, and then all of your profit starts going away. So that's my new game plan. I'm just going to take low hanging fruit. This was 40. It was, once we pushed through it, it didn't really slow down and went all the way to 50. So I just left it on and went ahead and got, let's see, how many points was that? I got out at 50. So that's 26 points. If you're trading one micro, that's $50 roughly. $52. But if you're trading a mini, and with this setup, you can trade a mini with low risk and get that. That's $500. And so that's my new game plan is I'm just going to grab that, get a really good entry, and just try to grab 15 to 20 points and be done with that reversal. Okay, so we came down and we made a new low, and this will be our new breaker right here. So we can move that down here. Let's see if we validate. Okay, so we push through it. We have candle bodies closing above. We've got a fair value gap. So we would enter somewhere. We would enter right there on that candle. Okay. Let's put in a line. Oh, let's just put in one of these arrows. Put it now. Okay, so I would enter on this candle right here, that red one, and I would enter at the bottom of that green candle right there. You can blow it up bigger where you can see it. There we go. So there's a fair value gap. I would enter one tick above the bottom of that candle, and so I would get filled here. So my entry would be there, and let's just say we tried for 15 points there. Would we get filled? Yes, we would get filled. How long would it take us to get filled? We'd have to wait 5, 6, 7, 8 minutes. We'd been filled. If you tried for 10 points, that's $200 on a mini. Yeah, you would have still had to endure this consolidation right here. You'd get in there, so you'd be 1, 2, 3, 4, 5 with a big push down, 6, 7, 8 minutes, you'd have your 10. And it is kind of nerve-wracking when you have a mini on and you're seeing that, movement, because it's the dollar signs go up and down. So how big would our stop be? It's best if you do this before you enter a trade. If you went to the bottom of that fair value gap, that's 7 points, all the way beneath the breaker top would be 10 points. So you can do a $200 stop loss on that, and it'd be a 1-to-1. Try for 15 points would be a 1.5 to 1 or 1 point something to 1. Anyway, I'm not good at those ratios. So at that point, if you're just, we obviously didn't take this high, but we took this one. So you can mark out a breaker to the downside on that. So this would be our run on liquidity, and this would be our bearish breaker. We push through, we get a fair value gap. We would enter there. I'll put another arrow the other direction. We would enter right there to the downside. We would get filled right here at 207.75. Can we catch 10 points? We could. Could we catch 15? We could. We went all the way back down to that breaker, which is common. We know those are revisited. So 15, we would get entered here. 1, 2, 3, 4. You're at 10. You're at $200. 5, 6, 7, 8 minutes. That trade has worked $300 on a mini. What kind of a stop loss would we have to have? We would be entering here. You would want your stop preferably above the candle that created that. That's 5 points. $300. And these are almost guaranteed trades. You can go through here and find these. Once it validates with a fair value gap, very, very rarely will it go back up before taking out liquidity below. So you could just put one of these as your liquidity, like that fair value gap top. And just do it that way, not static points, just do it that way. How many points would that be to that fair value gap top? We enter here, we go to there, We take out that liquidity. That's 15 points. That's exactly where we were aiming. $300. So that's my new game plan. Instead of trying for all these highs up here, even on a directional day, you get one of these to validate, you can make 10, 15, sometimes 20 points, and it's almost automatic. So it's like guaranteed money versus maybe money. Or maybe you get up $800 and um, then you get pulled back and stopped out at break even again. So this one ran into this fair value gap and touched that breaker. So in that situation, we're just waiting for another fair value gap. You could even go long right there because that's usually pretty good indicator. We've come back down to the breaker and now we've rejected off of it. So you could go long in any of these, like enter right there. Would you get your 15 or 10, however many points you're going for? Absolutely. If you just did a static 15, I mean, it went up to that breaker. I don't know if I would go that high. I would probably just go to the bottom of the breaker. So you don't know where it's going. You could actually enter there and then try for those highs, and you would have gotten them. You would have been in the market a long time. So just grabbing that first 15 would have been fine. Now, as we got down towards the end of the day, we did another one where you could grab points here and here on the way down if you were just going for 10. So this one didn't sweep any liquidity, so I don't know that I would actually enter that trade. This one did sweep liquidity, so you could enter it. Push through with a fair value gap. Did you get an entry? Not necessarily. It never came back up to the base. You could try to enter there, but you'd be entering a few ticks below. And let's see what kind of a stop loss. That's 6.75 points. So I might try to get one in there, but probably wouldn't have gotten filled on that one. Could you get any points out of the deal? Let's say we managed to get filled there. It went 15 points. Yeah. If you got filled right that tick right there, you would have got 15 points. So that's $300. That's right at the end of the day. I don't know if I would have taken it. But I did take this down move. But you can see the breaker is way down here. So I actually moved it to a 30-second. And once we validated the 30-second, I entered here. And I caught this move down as well. But I believe I got out in this consolidation. And I really felt like we were going. I had a level mark down here, and I felt like that's where we're going. And this one actually came down and touched it to the tick. It was a regular trading hour, 4-hour consequent encroachment. I can show that to you. Regular trading hour. So this will be the entire thing, and you include the volume imbalance. So that's like a fair value gap with a volume imbalance. So I just moved all the way down to here because you include the volume imbalance. That's actually like an opening gap. And then you mark the consequent encroachment of it, and you can see we came right down to it. I think I might have my line just a little bit off, which that happens. Yeah. Where I had it drawn out, it came and touched it to the tick, but I might have had it off just by a little bit. But that's close. I was thinking we were coming to 50% of that, and that's where we came to, and we never went any lower. And so that's it. Oh, you know what? I'm supposed to be to right here. So I have it all drawn out incorrectly. And if we don't include the volume imbalance, that would put us right there. I think that's the way I had it drawn. And we came right down to that 50% rejected. So it wasn't to the tick like I thought. I don't know what I had drawn out, but whatever I had drawn out convinced me I was seeing a bottom. But that's where I thought we might be going, and I did jump in on some impulse trades, try to get some more money out of that run, and didn't work out. Let's look at that level where we fell out of bed. It was Wednesday. It was the 16th. Yeah. Yeah, right here. Okay, so this was a regular trading hour low that we were targeting. And we'd come down and taken out a previous, we'd filled the gap. I thought, okay, we're going back up. I buy the breaker. Everything's going well. I think the breaker was right here. Yeah. I buy the breaker. Everything's going well. Price is moving in my favor. And I can't remember if I was doing micros at this time. I think I was. But here you can see we violated the breaker. I probably would have got stopped out there. But you could re-enter once we have this fair value gap, re-enter right here. And, things were going great. It was choppy, but it was going great. Up 40 points on one micro. That's $86. I think at this time I had 5 micros on, so I was up $300-400. And I moved my stop to break even, and guess what happens? Bam! What if I would have just grabbed 20 points? Could have bagged $200 right there. And I've noticed that happening. I would say 80% of the time that's happening. That I am getting stopped out at break even when I previously had profit. So I'm changing up the game plan. That's been happening for way too long. I'm like Forrest Gump. Mama says I'm not a smart man. Whatever. You keep on doing the same thing over and over again, you're going to keep getting the same result. And so I've got to change it up because if I wrote down every time that happened, I bet you it's at least 70% of the time, maybe 80% of the time. I'm in a trade, everything's going well, and I get stopped out at break even. And I would rather take $200 to $300 and move to the next trade with that in my pocket rather than $20 in my pocket and being pissed off because I got stopped out. So, new game plan on that. But yeah, this was the deal where they said, "Oh, Trump's going to fire what's his name," and we ripped down. I think this is where it started, and then kind of started coming back up, and then, even that you could consider this. Here's our breaker on that. If we ran those highs, they use the news to move the market where they want to move the market. So we ran those highs, and then big fair value gap. You enter there, you would have caught that gigantic down move. But this is such a huge candle. Even right there, that's 25 points. It would require micros, just a couple of them. But for the 200-point move, 2 micros will get you a lot. Now, if you would have had this level marked as an important level, you could have aimed for that because we went right to it. And, our breaker's way the heck up here. But as soon as we got to the breaker, we just ripped all the way back to settlement, which just happened to be also where this breaker was. Trickled back down. If we use that as a rejection point, we could have got another 15, 20 points. Let's see. Wow, Jiminy Whispers. Woo! 64 points. We filled in that fair value gap. If you were just going to grab 20, you could have got it quickly. On that candle, you could have got it. You could have been in and out of the market in 2 minutes with a $400 bill. Yeah. If you just entered when it hit that. How many points did it go above it? 7 points. Yeah. It would have been scary to do that, but short right there, 20 points, 60 seconds, you would have been in the market bagging up $400 on a mini. That was a very volatile time, so it'd be hard to do. But that's what I would recommend you do for your. Yeah. Okay. I thought my video ended. That's what I would recommend you do for your chart homework, rather than getting $1,500 runs and trying to get a max profit day every day. There will be days you can do that. Most definitely. This kind of movement is not predictable. None of that is predictable. What is predictable is that the market will come down and it will take out lows, and then it will validate a breaker and it will move at least 10 to 15 points. That is predictable. So, so here we came down, we took out this low. This is our last down close candle. You can go through and mark these out, just regular trading hours only. Don't do overnight. Get rid of all the noise and just mark these out. There's our fair value gap to the upside. Our entry would be right here on this candle. So we'd be a tick above here. We would have got filled in this candle right here. How many points could we have grabbed? Let's just say we're going to go for $200-300. If we went to that high, that's 33 points. And you could do that. Those are relative equal highs. You could aim for that. 35 points. That's $700. That would be a level where I would say, yeah, aim for that. If we're in the middle of a bunch of chop, just grab 10 to 15 and be done with it. But if you're seeing a very clear level of relative equal highs like that, do it. $350 on 5, $700 on a mini, and then once it gets there, stop. We have another reversal pattern here, but is it going to work out? Do you want to risk what you just made? It did work out, but you don't know that at the time. We could wick here and then go back up. And we did do that. But ultimately, once we validated this breaker, we fell. But I don't think there's a good entry there. Yeah, I would have probably been stopped out if I was playing off of this. Actually, you know what? The breaker's here. Might have entered that one too. Because we ran that liquidity. Breakers here. No fair value gaps, none. Finally, we get one right here. Yeah, I think I probably would have entered this one and it would have worked out. So I would have been filled on this candle. What kind of stop loss? I would have put my stop above the candle that created it. That's 16 points. So I wouldn't do a mini on that, but I might do 6 or 7 micros. And then we just try for 15 points because we're in ambiguous territory. Back down to the breaker, perhaps. It's 30 freaking points. That's another $600. So that's it, gentlemen and ladies. That's my chart homework. I want you to go through, look at these, mark out your 4-hour highs and lows. You can take trades just there if you want, but also intraday levels, like when we're jumping around through highs and lows. You can grab a breaker situation there and just try for 10 to 15 points. And we're doing it with a mini. You're going to make good money, and it'll be guaranteed money. It won't be, oh, I sure hope it goes down 250 points so I can have a decent day with my 2 micros. It won't be a day like that. But you have to have spot on entries. The fair value gap, you'd want to enter, like I was saying before. You want to enter a tick. That means this candle just got through forming. You got to wait for this candle to form just so you can, see what's going on. You can enter right there once that one closes, but tick below the high of that one. And if it's bullish, you go a tick below and a tick above the low of this one. Okay, so this one would have filled you. Enter there, spot on. Stop goes below candle that created the fair value gap. So you'll have to measure that out while it's forming. My camera timed out there. But what I'm saying is you'll have to measure this out. So you're going to enter a tick above the low of that candle, measure that out to get below it. That's 20 points. That's too big for me on a mini. That's $400. I mean, you could do it. You're not going to break the bank if you have a pile built up already. But I like to do just 10 points. If I can get a 10-point, $200 stop loss on a mini, that's a good payout coming. But on this one, because it's 20 points, I would use micros. But you're measuring all this out as you go, as it's forming in real time would be your best situation. I didn't intend for the video to be over 30 minutes, but it is. So I hope y'all get some good information you can use from it. Here's another one where we made a new low, took out all these lows. Our breaker would be this guy. So, I mean, you can just go through and mark these all freaking weekend long and just see if I only took 15 points off of this run, how much money would I have at the end of the day? You can pick any day. And I bet you it's going to, if you did 15 points on a mini, and you'll just have to measure to see, well, could I have gotten a mini there? So here's our fair value gap right there. Yeah, I would, in this situation, I would put my stop below the breaker. So you just measure. I'm going to be entering a tick below, a tick above that low. That's 11 points back to the breaker. Maybe you get below these lines here, that relative equal. So that would be 19, 20 points. So I would just do 5 micros, 6 micros on that. Can you get 15 points from there? Yes. You could aim for these relative equal highs. That's 34 points on 5 micros. That's the same $300. It's $300 plus. How many times a day can you do that? That's your homework for the weekend. And just add it up. What if I went for $300 5 times a day? If the setups were there, you could do it 5 times a day. Wouldn't that not be the same as getting one trade that paid you $1,500? You'll have to just start trading a little smarter. This was a situation that aggravated the heck out of me. Why didn't we take that stupid high right there? We're up here close. You don't want to take it. That's a situation where you pick the highest point, mark your breaker, probably be this one, close below it, go short. Even though that's looming, go short. How many points would you have gotten there? Good Lord. That's a sweet one. Even just to the lows here, that's 73. So just market conditions will determine whether or not you're going for 15 to 20 points, or if you see an obvious setup like this, go for the 70 points. It really just depends on market conditions of that day. If we're doing a bunch of chopping around, putting up 20, 30-point candles, I would say just go for get your money, get out of the market immediately. If news bombs are flying, get your money. I mean, in these situations, you're in the market 2 to 3, maybe 5 minutes. Those ones we looked at earlier, 8 minutes. You're not going to be holding it for an hour waiting it to get to your take profit, because that's when the news bombs hit, and that's when you go from $300 or $400 profit to break even or stopped out for a loss. So get in, get out, get your money. Remember to be kind to yourself, be kind to one another. I love each and every one of you. If you have any questions, feel free to leave them in the comments. Until next time, trade well.